How to use the QDB spreadsheet effectively, some use case scenarios. First and foremost, we would want to check the average bubbles. It's the core of what we do in the QDB service, and it's like the bread and butter of the system. And we want to examine if things are a buy or a sell, but not only that, but are they more of a buy or are they more of a sell over time? More over time is the dynamic component, and that's the time component. So that's what gives us the edge in the QDB service. Let's say we have two bubbles at extreme lengths. So we get a value between the two. It's a distance over time. So it should be quite straightforward. The pound was already above 50%. So it tells us they were long. USD was already below 50%. So it tells us they were short. And this is obviously the key, is them adding to that bias over time. So they added to their pound longs, they added to their USD shorts. So they were already had a pre-existing bias, and they've added to that bias. They've got a pre-existing bias, and they've added to that bias. Now the arrows designate time, and what's going to happen? We've got a signal from the two, and with any luck, they continue to be counter trend. And they continue to be counter trend, and then they push the bubble over here and they push that bubble over here. Time is the key, as it tells us what they're doing in real time. We can also call this the dumb money flow. Here's a picture of the lemons, and this is symptomatic of your average retail trader, and little do they know, but they're going to be liquidized. And I see it time and time again every single day when the stop loss clusters get triggered, and a lot of the time the stop loss clusters get really moved very, very high or very low from price, and that just tells us that they're getting fed up of being liquidized and they're just pinning it off, and it's actually made it worse for themselves. So currently the dollar CAD's got a stop loss cluster hundreds of pips above, and they're just getting fed up of being liquidized. They don't want this to happen anymore. Well, what's going to happen is that eventually they'll get liquidized anyway as price goes higher, and because price tries to seek liquidity, but they don't realize that. So unfortunately for those guys, they're probably going to get squished, and so we'll just have to wait and see what happens there. But we'll track that particular currency pair on the spreadsheet, and I'll show you how to do that as well. So we knew already the pound was a sell, and but they added longs, and we already knew that USD was a buy, but they added shorts. So they've compounded that issue, and it's made a stronger indication for us. It's made it worse for themselves, but better for us. Okay, so pound USD can be synthesized as a highly probable short opportunity. So as you probably know already, if you don't and you're new to the QDB system, this is your long short line, and this is time, this value here. So this Z is basically positioning over time, and it's the dumb money flow, and this is what we examine. So we want to examine the dumb money flow over here in the top right. We want to examine the dumb money flow in the bottom left, and ideally we have bottom left, top right, but we can do left and right. It's just better to do bottom left, top right. Left and right is okay, but it's better to do the extremes, the top right, bottom left. This logic will work, and it will hold true as long as the herd hold on to their losses and they add to their losing bets. So they'll not only be counter trend in the first place, but they'll add to that bias, and it makes a strong signal for us. If by some strange circumstance that they have excellent risk management skills and they get out of a bad trade and then they reverse, it's going to impact our signals. But so far they have been quite counter trend, and they've been losing lots of money. As long as they do, this will be fine. This QDB logic. So there's the contrarian logic and how to use the spreadsheet. So this is the primary purpose of making this video, is to tell you guys, or to show you guys, how to use the spreadsheet. So we've seen the bubbles, and we've been notified in Discord about the max bubble deviation. So we have our trade of the day, And perhaps you just want a little bit more information, so you can look at the search tool, and it breaks down things like monthly pivot, weekly pivots, your daily pivots, where price is in relation to those pivots. It tells you the positions, the volumes, it gives you a momentum, it gives you a nice pie chart in the bottom left there. And what should happen is that when it crosses the 50%, we'll have a bias that's formed, and then price will be reflected. And you can see how negative we are on the momentum, and it's because they're long. Right, so try and get the pie chart to agree with the momentum, and that's quite a good little feature you can do. There is one little thing, a little caveat here, is that you see in the top right we've got the bears break even. Their break even entry is at 119.43. That makes them up 204 pips in profit. Now for my FX book retail traders, that's actually quite good. So for me, that's a little bit of a warning sign for pound USD shorts, in so much as that these guys are getting paid, and they don't normally tend to get paid. And what should happen in speech marks is that they take profits. So this is a little bit of a concern. So there's maybe a good reason to be looking at the search tools just to make sure that the bears and the bulls aren't profiting. And currently the bears are. So that's a little warning sign. And you do note that we're coming up to a stop loss cluster as well. Stop loss cluster is very close, and we have some demand as well at 118.06. And if by some happenstance or some occurrence that we get that demand on the daily, then we'll have technical justification for longs. But sentimentally, it's looking quite heavy, and fundamentally as well, we'd have to check the fundamentals. We have things in the UK right now. We've got the PM leadership contention. We've got a surge in inflation, 18%, which is ludicrous. And we've got potentially a new king and the new policies as well. So there are things that you need to take into account. And but at a sort of high level, we'd come to the bubbles first and foremost, check your search tool, and then we'd want to try and address some of those fundamentals that are going to impact the trade as well. So pound USD long could be risky, but if we go risk on in the stock markets, then the pound's going to appreciate over its safe haven USD. So there are things to take into account, but I would definitely come and search the search tool as a secondary measure. Bubbles first, then the search tool. And then of course we'd want to check the fundamentals as well. Additionally, we can use the sentiment heat map with great effect. Now, because we know the counter trend logic or the retail trader, when he or she buys, we should, in speech marks, see price reverse. So this is that indicating them going long over time. And so that's quite self-explanatory. And we can see how they add into longs over time. So it's gone to 2%. So price should be falling because these guys are going one particular way. Okay, and it's just given us a greater confirmation of like a bearish development on this particular pair. Now, a sudden surge of bullish positions would naturally be a bearish development. Now, a big surge all suddenly for whatever reason, it's probably news related, that's going to be a bearish development. So you could check the sentiment heat map, and if you have a big increase, like an influx of positions, that's normally going to be quite a bearish development. Likewise, this way, then it would be a bullish scenario. If they sell it very heavily, suddenly, it's going to be a buy opportunity. So the sentiment heat map might be quite good for you guys. Another alternative is the MyFX Book failure rate tab, and having two red cells against the pound USD would not only satisfy technical but also sentimental criteria. The DP distance is basically the current price from the daily pivot. When they buy, price should fall, and when they sell, price should go up. Here's the dollar yen, they sold it, price went up. The pound USD, they went long, price fell. And that's just like, that would be quite typical and quite normal. However, do note on Friday, obviously that's a caveat to be told, and for me to tell you about, is Friday can be payday for the retail guys, and we see in the Swiss yen, the euro yen, and the pound yen, in so much as that they've gone long by 3% and they've actually been paid. They went long by 3%, they got paid. They went long by 1%, and then they got paid. And you see how that works. So Friday can be payday, so we do want to be careful on Fridays. I tend to take Friday off because of this, and we see it quite a lot on Fridays. So you can have a look at the My Textbook failure rate tab, and what you'd want to try and do is identify your particular trade you're interested in, and just ensure that it had 2 red cells. If it had a mismatch, don't enter, and you'd wait for the cells to align. Okay, so that's one use case scenario for that. And lastly, we need to think about the important checks that we need to do. We need to undertake some important checks. So what is your position size with respect to account? If you don't know what that is, you need to click this link. I'll just go to Google and type that in, and it'll tell you your size according to your account. So if you've got a $1,000 account, you shouldn't be really having large sizes. If you've got a larger account, then you can increase your size in. All right, so that's really, really important, and you wouldn't exceed 3% on your trades at any one time, and that's across all trades. And you wouldn't want to go above 5%, to be honest with you, because we're just talking about risky territory, because it does take 20 trades and you burn your account. If you keep it smaller and your size is smaller, then you'll be in there for the long haul, and I'll keep you as well, which is important. I need to build this community of ours, and I don't want people to be blowing their accounts. It happens so frequently, it's quite scary. So know your size, and you also need to know where your exit is, and you do need to know where you'll be wrong as well. So that's where technicals come into play. We have a very strong demand area for the pound USD. It's 42 days old, and the level of interest is 128.06. Now we have maybe a daily candle below that. That's why I would exit my long. Say if I was long, I would not be long if we were below that daily demand, because it's 42 days old, and sentimentally it's a sell. Going by this hypothetical situation where the bubbles have aligned. In this case scenario, for this PowerPoint, is that the pound and the USD have deviated and created a pound USD signal. We don't know if that's going to be true tomorrow, but hypothetically it's a sell. So we know that's a tick. Perhaps the fundamentals are a tick, because there's quite a lot of scary things going on with the inflation and the political uncertainty. And then you've got to get the technical to align. And I would not be long, if we breach 128.06 at all, and then that'd be quite bearish. If we go above that, then we'll have that demand, and it's 42 days old, and then we'll be back above. But do know where the stop loss cluster is, and we are close. And do know that the retail bears are making money as well. So there are things to take into account, and this is how you can use the spreadsheet as well. And hopefully it's a good demonstration. And I welcome you to the QDB service. Any questions, you can ask me anytime. And I've got a Q&A later, so I'm looking forward to that as well. So hopefully it helps, and I'll speak to you soon.